Hi, my name is Don Schellenberg. I'm a trader, educator, and I've been producing professional level analysis in the financial markets for about 10 years. And I've been making a gold commentary available to brokerage firms, major investors, and many of my students around the world. I'd like to let you know a little bit about how this premium gold commentary might be valuable to you. And let's take a look here. So the purpose of the premium commentary is to help traders and investors make informed, smart decisions based on professional technical analysis. Also, to provide education and trading strategies that are relevant and powerful now and will continue to be so in the future. Not only in the gold market, but in every active market. I have many students who may not trade gold, but they love this commentary because it gives them ideas and tips and tricks and strategies for trading in other markets as well. I'm going to give you a very recent example. I'm not pulling something from ancient history. This is right up to date to show you a little part of what we do with our weekly analysis. This is a gold daily chart, and recently the market has been going quite sideways. I give what may be relevant information here. This is not part of our strategy, and the indicators are not something that I rely on very much. I'm relying on advanced ideas of market structure, which include some classic patterns, advanced Elliott wave patterns, and others that we won't go into detail right now. And at the time where this picture was taken, this describes, this little box here shows the last 5 trading days in that particular week. Notice that the market, in essence, was going sideways, looked like it's starting to go up. And now I'm going to let you know what I actually stated in part of our analysis. This is from the commentary that was included with the chart you just saw. I suspect there will soon be another upward attempt to test the 1225 area. In advance of that, and that's important, there could easily be a quick spike down to test the lower end of the trading range around 1175, followed by an upward rebound toward the upward end of the trading range around 1225. So that's what we sent out to our subscribers, along with other very relevant information. Here's the chart when the next week was completed. Notice the week before the market was pointing up. Now the market moved down, and where did it go? Exactly to the 1174.75 area. You see the low right here. That's what we had said. It's very likely to happen. Now, it didn't spike down as I thought it may, but it came down to this significant support level that we've had in place actually for weeks. What did we say after we saw this? Here's what we saw. We said, okay, our question was, will the support level of 1175 hold? That's what it went down to. It reached there, the target that we suggested exactly. The reason there's even a question is that the move down this week has been more powerful than we expected. It wasn't a spike, it was a deliberate move down. There are a couple of factors to consider. This week there were 5 small waves in the downtrend. What happens after 5 waves? We expect a correction, which would be up, that to be followed by a continuation of the trend, which would have been down. Or, as we emphasize here, we can expect a reversal, which in this case would be upwards. And we actually said that if it can break the 1200 level, which at this point in time seemed quite a ways away, it could go up to the 1225 and perhaps even higher. Okay, watch. Now, this is an intraday chart, a 1-hour chart. What we saw in the previous 2 charts was the daily chart. What I'd first like to point out is every week we try to indicate, if we can in advance. If not, we look at the opportunities that were there, and if we were following the chart during the week, because we only put commentary out primarily on a Saturday, and if there's something exceptional happening midweek, well, we'll give you that information as well. But this was the information that applied when on the daily chart it didn't seem much like much was happening. A lot was happening on the 1 hour chart. And you can see the breakouts that took place here, 3 of them in this particular week. And if you were able to take all of those in the futures chart, you would have made on playing one lot, you'd make nearly $4,000 US. That's on one lot. Even if you were doing what we call the cash market, yes, you'd still end up with a lot of cash. That's a fact. Okay? But what we're talking about here, you can see where the market came down to our 1175 area. Even on the hourly chart, it didn't close below this 1175, and it started to move up. And we pointed out that the market could be moving up from here, and if it breaks at 1200, which was a very important level right up in here, it is likely to carry on. Okay? So this is given in advance, and did I skip something? I think I did. I jumped ahead. That's not a problem. What happened here describes the previous week. Now, here's what happened. Monday, after the commentary was made, it moved up to right around in here. And then on Tuesday, wow, did that ever take off? Cracked right through the 1200 level. And at the time I'm making this video, it's sitting around 1211. Okay? All of this is no surprise to us based on our analysis and what we put in writing to all of our subscribers. Okay, well, I'm going to finish off with just this. Get your premium gold commentary subscription now. It's very reasonable, includes professional technical analysis. Most of our subscribers find it very informative and educational, and it definitely includes strategies for smart trading, not only in the gold market, but in any market that you might be interested in. So click on the button that you see, which is your premium gold commentary, and good trading to you.